You're not in love with any project. It is business. So, and the business you have in researching is, if I see something that is going to be a potential bullish catalyst for me to buy into a project or long a project, I am giving it to the longs. And then if I see things that are wrong with the project that is going to lead to the downfall, I am going to short that project. So after getting your fundamental, you use your technical to find your entry, and then you do your thing. So it is now goodbye to projects that are just willing to launch anyhow. So it is we're no longer in the situation where we are begging projects to behave themselves, right? In terms of doing the right things. If you don't do the right things, then we'll know what to do. So it is one of two things. You're either for catalysts for a pump, or you are looking at pitfalls for a fall. Because if you spot it right for a pump, you have an advantage of getting in before that pump, or while the pump momentum actually builds. Same also, this is not an exchange created token, right? These are projects that are being built, and then they are across different platforms that serve different continents and different nations. Because first of all, these projects are actually on the decentralized plane. So anybody have access to them. Anybody can have access to them from anywhere, right? Now, if people from different nations are buying into a token, and see, we just need to understand this concept. Because every time we talk about the decentralized plane, when you talk about decentralization, what decentralization means indirectly, I need to say this before we get into tokenomics. The idea of decentralization is giving power to each and every one of us, right? So we are trying to take power away from institutions, from governments, right? And then we being able to have this power at our disposal. So meaning that we can carry out transaction without needing a third party, without needing a middleman to facilitate the process. And then this is where decentralization actually came in. So if truly the power is going to be in the hands of individuals, remember, these individuals are actually scattered in different continents of the world. So what this actually means is the fact that if the power is going to be in the hands of individuals, it means that the most, should I call it, the most powerful individual will likely control the scheme of things. Why do I say so? If the space, for instance, if you are to buy into a project and then anybody can actually buy this project from anywhere, you now realize that yes, as much as the power is actually given to individual, if you want to buy a token and you realize that this token, 50% of this token is in the hand of the top 10 and people, all right, top 10 addresses on this project, 50% of that token is in the hand of the top 10 wallets on this same project. Will you buy? So what it now means is the fact that we are in a space where the most influential of us, the biggest of us, will control the narrative. It's either you have the influence in terms of people power, or you have the financial capacity, then you will control. So, and that is what plays out in this market that we are seeing every day. So we have people who are playing the influence game, who are playing the money game, and sometimes we have people who are playing the boat. Exchanges are playing the boat. Institutions are playing the boat, because institutions, they have the money and they can sponsor the media. So if you are making decisions, so the trading landscape is like a fight, right? We are fighting. You are fighting with the best of the best in the industry. You are trading against institutional traders. You are trading against big investors. You are also trading against market makers. You are trading against your fellow retail traders, as well as these centralized exchanges. And then the guy is validating on the decentralized plane. So one way or the other, what you are trying to do is you want to just be positioned in a way where you are on the printing side, irrespective of the fact that everybody who is actually on this side of the plane are gunning for the same thing. So if this is the primary goal of every player in this industry, especially in the futures market, if this is the same thing we are all gunning for, do you think that popular information would help you as an individual? What is going to separate you is not popular information. If the information is all over the TL, that is not what is going to give you your daily bread, or that is not what is going to give you a break in this industry. Why? Because the system of things was not program coverage. It is left to you to hack into the system by paying attention to details. Now, most of these details are actually available, but everyone is actually not seeing it. So you have to pay attention to these details. You have to understand the details, because the true essence, the true power of research is not in the information you see. And we're going to be seeing it as we start going into research right now. The true power of research is not in the information that you will get to find. It is not in the information you will get to discover. It is the interpretation of the available information. So if you interpret those information wrongly, let me not use the word wrongly, right? If you don't interpret the information from an unbiased position, you will end up following the crap about the BTC ETF. Guess what was going on the TL? Everybody felt that was a bullish sentiment. But did you go back to find out how does the BTC ETF drive liquidity on chain or drive liquidity into the cryptocurrency industry? Because for those of you who actually trade Forex, way beyond before now, I think way back into the year 2020, 2019, 2020, thereabouts, we were seeing cryptocurrency pair on brokerage firms. Why didn't you see that as adoption? Right? So the interpretation of the informations you have is where the alpha really lies. So when someone tells you that for everything that goes up, now, at what point will it start coming down? See, the power of research is more or less like what happens in psychology, right? Or should I say psychology or philosophy, where you are questioning questions. You don't just take things for face value. You want to understand by asking questions. So, for instance, let's digest this information. If everything that would dump is going to dump, at what point will it start dumping? Why should it start dumping? At what point do people lose interest in buying? Because if we're going to look at this phenomenon, we know very well that it is easier to pump a token that is less 10 million market cap, right? For instance, if a token lists on futures right now, and we'll go much more in depth when we'll start going into tokenomics. If a token is listed on futures and the market capitalization is $1 million, do you know that it is easier to manipulate a token that is a $1 million market cap than to manipulate a token that is a 500 million market cap? Because if you want to move that token that is a $1 million market cap to 10 million market cap, do you know what you have successfully done? That is 1,000%. But if you want to give 1,000% to a token that is a 500 million market cap, it means that you're going to be introducing nothing less than 450 $4.5 billion. You're going to be introducing $4.5 billion into the market cap. So let's look at it from an exchange perspective. It's easy for me as an exchange to move a token from 1 million to 10 million compared to moving a token from 500 million to 5 billion, which is 10x on both sides. So these informations are important. So let's now go to tokenomics. So tokenomics is how is your house prepared? Every token that you actually see in the market was actually built with this tokenomic structure, right? So we understand that if you are going to build a token, we'll need to see a supply, right? We'll need to know how many of this supply can ever exist. So tokenomics is just what it just simply means is the mix actually behind your token. So, and we're going to be using CoinGecko. We're going to be using CoinGecko to look at some projects and then interpret their tokenomics, right? Now, I think I would like to even first of all actually start with where to find projects. CoinMarketCap are amazing places. CoinGecko is an amazing place to actually find projects. But since we're actually dealing with futures, you are not just looking for any projects. You are looking for projects that are actually listed on the futures market, or projects that has been announced to be listing on futures market. So one of the ways people have actually discovered tokens that are going to be on market is first announcement from centralized exchanges. So those centralized exchanges, popularly the popular ones that a lot of people are aware of, are MEXC, right? And when they announce that, okay, this project is going to be coming to the futures aspect of the exchange on so dates, on so time, then everybody start waiting. So you can get those information from centralized exchange announcements. You can also, primarily, because most times these projects can tell you that they are listing on MEXC, but they might not likely tell you that they are going to be listed on the perpetual part of those centralized exchange. So most of the time, it is this exchange that will actually announce it, right? So it is important to now pay attention to the exchanges. Now, one of the things I just want to say in this session in finding token, because I don't just go in depth because of time, so that we can actually cover other things. Pay attention to centralized exchange that lists meme tokens or that lists tokens the most in their futures. I'll come again. Because if you're looking for future pairs, and there's also a twist to this thing. Please, for everything I'm actually going to be saying, try to understand what I'm trying not to say, because I'm honestly serious. There's things we can't say in this session, right? And I'm compelling myself not to say. So if by virtue there's going to be another session where they are planning for, then where we can comfortably say all of these things, will we? So, but in most of the communications I'll be doing, listen for the things that I'm also not saying, but you will get a clue, right? So pay attention to exchanges that list tokens the most in their futures aspect. That's the first part. And then for those of you who don't know those exchanges, let me even just list a few, right? I can just tell you about two. And there's something you also even need to understand about exchange listing. MEXC lists projects, very much aware of MEXC. But there's an exchange that lists much more than the NXC. The lot people are not even aware. L Bank, right? L Bank and some others. But for now, L Bank and NXC. Now, one of the things you need to understand about exchange listing is the fact that exchange listing is more or less like the ground for exposure, right? So, for instance, most of you actually came from the days of Shiba Inu. One of the things you realize is the fact that right from the past, people who have actually traded memes, one of the things they always wanted to see was the fact that they wanted these meme tokens or these tokens that they are so hyped about debut on centralized exchanges. Why? Because when you are still in the confines of the decentralized space, there is I won't say a limited amount of audience that you get exposed to, but there is more markets in the centralized exchange because the centralized exchange made it even much more easier for some people to interface with cryptocurrency because of the whole complexities there are in the decentralized world. So a lot of people you have more audience in the centralized space than the decentralized space. So, and that's more reason why when you see projects, they are doing well, building momentum in the decentralized space, one of the things they try to do is they try to transition into centralized exchanges. Why? Because they need more liquidity from those exchanges coming into their project. And then you can now start telling that most of these projects, when they start moving from, let's even say tier 6 exchange, let me call it tier 6, for instance, Bitmart. Oh my God. All right. So I'm not shading any exchange, right? So, but from Bitmart, you start seeing them on Bitmart, you start seeing them on Bing X, they start climbing the ladder, in terms of the tier of exchanges. They start getting into all those exchanges, and then before you know it, you see them on Gate.io. You see them on KuCoin. They're now getting into BitGet, right? You're not even seeing them on L Bank, and then you see them on MEXC. Now, when they now transition, so this is another level. When they now transition into Bybit, see, I think I said it in a session I had in December. Bybit is no longer a tier 2 exchange, even if it's not there on the TL. Bybit is a tier 1 exchange now, right? So, and I don't need an announcement to know this. I just need to interact with the market to understand it. So by the time they start climbing the ladder and start getting into even much more exchanges, you're talking about more exposure. And that's more reason why, for the most part, when a lot of projects list on Bybit, you can tell that liquidity is going to flow into it. When a project lists on Binance, at the announcement of that listing, you see a lot of people getting in. So these exchanges are for exposure. So while we're having this morning, we're having a conversation on the Telegram channel this morning, we were concerned that MEXC might likely start, maybe, we're just saying, this is not, it's not cast on stone, that centralized exchanges might start listing tokens just because they want to actually liquidate folks, right? So now this is it. So how can you actually mitigate on that? Presence. When an exchange is the only exchange that have listed a particular project, it is easy to manipulate. But when a token is on multiple exchanges, it is much more difficult to manipulate, except collaboration from these other exchanges comes into play in respect to users interaction. For instance, I don't want to give that example here. So, but let's just go into tokenomics because of time. Let's go into tokenomics. Now, this tokenomics is actually very important. So let me start with the popular ideas we usually have. Yes, I can hear you.
There are some information we actually said we reserve for security purpose. But from
Yes.
CAC not to do. So
Sure.
we'll go to the master class after this class. Okay? And those ones they throw it on the floor, they can throw it out. It's net for them. So let's just focus on this one. I'd like where you're going. Just be discreet because those guys are here. You understand? Let's fucking go. Yeah, those guys are here.
All right, guys. So now one of the things I need us to actually pay attention to, the reason why tokenomics are actually important is because, remember, when I actually showed us this slide, I said an unbiased approach in determining both the potentials and pitfalls of a project. Most of the time, a lot of people, they want to actually take advantage of airdrop projects when they want to launch, and then they say, okay, they're going to take action when they actually trick them. An understanding of tokenomics would help you know what to do in regards to trading these projects. You don't go into the market trying to short everything, and you don't go into the market trying to long everything. What is going to determine your position? Tokenomics will start, and then other fundamentals will follow. So let's go to tokenomics. So, and I'm going to be using a project that I invested a lot of money into to actually play the game, which is IMT, Immortal Rising, for those of you who are actually familiar with the project. And I want to use the tokenomics to help you understand something on how tokenomics could impact your project, how not just the tokenomics, but because in tokenomics your tokenomics is bigger than your supply, right? And valuation or possible valuation. In fact, I don't even look at price when it comes to tokenomics, because you will always arrive at a price when you understand what the valuation is in terms of market capitalization or fully diluted valuation and supply, right? So aside your market capitalization and the supply, the key element you should also be looking at is your emission rate, your emission pattern. When we talk about emission, how are you planning to distribute these tokens? And then for the tokens that you're going to distribute, after distribution, the other tokens, if there are, how are they going to be emitted? These things can either destroy your project or sustain the project. And then we're going to be using this as a case study. So let's look at the supply, right? So let me explain what the supply is. So for those of you who actually see supply, there is max supply, there is total supply, there's circulating supply. Let me pull this out. Control A. So there is max supply. So I never knew I would be doing this mathematics. Just like it was. So there's max supply, there's circulating supply. So there's total supply. So let me actually explain this. Now, when you're actually looking at the max supply, these supplies are actually important because your supply is speaking to the quantity of the token, right? The quantity of the token. So for instance, if I talk about supply, max supply simply means that how many tokens will ever exist from this your project. That's what we mean by max supply. How many token will ever, the maximum token will ever exist from this project. Now, what is the total supply? The total supply actually means that out of this token that can ever be in existence, how many do we have already minted? How many have been minted, right? So the word mint is the process of creating a token. The process of bringing forth a token, right? So let's just call it available tokens. And then circulating supply is how many of these available tokens are in the market. Please note this. Tokens available in the market. Now, so let me use something that we can actually relate to it. Let me use Indomie, for instance. All right. So for those of you who don't know what Indomie is a noodle, right? So let's assume that this Indomie is the token right now, right? So if Indomie as a company tells you that we will the total number of Indomie sachets in terms of pack, one sachet, the total number of Indomie we want to create in our lifetime of existing as an Indomie company is going to be 1 million Indomie, right? So let's say 1 million. So that is the maximum quantity of Indomie that will ever be created. Then the next thing we now want to understand is, okay, you have helped us understand that this is the quantity of Indomie that you will ever create in your lifetime. Then the next thing we now want to understand is, out of this 1 million, how many Indomie have you already produced? So the number of Indomie they might have produced already may just even be 500,000. And guess what? This 500,000 Indomie may even just be in the warehouse or in the production firm. So, and then most times when it comes to tokenomics, the total supply may be locked in a protocol, right? Or vested, right? So vested means that it has actually been locked for a period of time to be released. Okay? So that could be one of the things that could make a token sit in the total supply. Then another concept is circulating supply. So right now we have moved from how many Indomie will you ever manufacture, which is 1 million. We now went to how many is already existing, 500,000. All right, so your warehouse, I mean, in the production factory, they have minted. Remember, they have minted 500,000. Now, how many have you distributed into the markets? Do you know that if you go to Indomie factory now, there are some Indomies in the factory, right? Or in the warehouse or in the production house. So, but how many is in the market? So now, what is going to be in the market? Let's just even say maybe 100,000. Now, let me give you guys a clear understanding of how these things work. When you talk about supply, now remember, we said that max supply is the number of tokens that will ever exist. These now mean that there is no way in heaven and on earth that total supply will be more than max supply. And there's no way that circulating supply of a token will be much more than max supply. Take note. Why? Because max supply speaks to the total quantity of a token that will ever be exist. That will ever be in existence. Now, total supply now. Now, total supply is saying that, okay, we have been able to mint this number of tokens. Now, what this actually tells you is the fact that for your circulating supply, no matter how many tokens that will be in circulation, it cannot be more than your total supply. Because what is in the market cannot far outweigh what has been produced, except they did artificial token, right? Except people did artificial token, but obviously you can't confirm it on that blockchain. You have to go and create your own contract address and all of that, right? So the max supply is the token that will ever exist. The total supply is what is actually available from the max supply. And then the circulating supply is what is actually in the market. The understanding of these concepts will help you understand valuation. Valuation have to do with market cap. Let me denote it with NCAP. And then FDV, which is the fully diluted valuation, or you can also just say fully diluted market cap. Let me just use that word, right? Fully diluted market cap. So when we talk about market cap, we are talking about market capitalization. Now, the word market capitalization is the combination of two words, which is market and capital. How much capital do you have in your product that is in the market? It's as simple as that. So in your market valuation here means that if we take all the total supply, especially for projects that have an infinite max supply, that's when I look at total supply. But if you want to look at the fully diluted valuation, if a token have a specified max supply, that is where you take it up from. So that it makes it easier for you, because one thing about projects is the fact that if they tell you that their max supply is 1 million, just know that 1 million is going to be created. It's just a matter of time. So and that's more reason why I don't calculate my fully diluted valuation with total supply, except that max supply is an infinite value, or it has an infinite supply. And the reason why I'm saying that is because there are some projects that have a max supply that is stipulated that can be 1 million, and then the total supply is the same 1 million. Why? Because the max supply has been minted into existence, right? Into the total supply. But there are projects that have different max supply and different total supply. So if you say that your fully diluted valuation is going to be on the total supply, what about the other remaining 500,000? When it comes into the picture, you have to start recalculating. Because this max supply can be minted anytime and pushed into circulating supply anytime. That's why I calculate my FDV based on max supply if available. Then if it is an infinite supply, then I use total. It is not about the information that is there or that is popular. It is about your safety. Right? It's about your safety. So when I want to calculate this fully diluted valuation, since I already know that the value of each of the Indomie, which represent the token, is 1 naira, or let's even say $1, right? It means that I'm going to be multiplying it by 1 million. So one quantity of the token, which is priced at $1, multiplied by 1 million, will give you $1 million. And automatically, that has helped you understand how they come about fully diluted valuation. Now, but so let's now look at this. Let's now look at this concept. So if I know now, the reason why we're able to calculate, please pay attention. The reason why we're able to calculate the market cap and the fully diluted valuation was because we knew what the cost of one item, all right, or let's even say one token, the value of one token, which we can also call the price of one token or one Indomie. We knew the value, and that's why we're able to calculate it like this. What about situations where we don't know the value of one token? And for those of you who have been farming airdrop, that is how most of your influencers, they come about helping you understand that, okay, if the token lists at 100 million market cap, with this circulating supply or this total supply, this will be the price. This is how they actually got it. Because remember, when we wanted to get the market cap, let me just put this here. When we wanted to get the market cap, we said circulating supply, right? Let me just create a mathematical equation. Circulating supply times, let me say current price. I don't want to just use price. Current price equal to the market cap. Please note this. So when we wanted to find the market capitalization, we said circulating supply multiplied by current price, right? And then when we wanted to find the fully dilution, we said total supply or max, let me use max supply multiply by current price. And that gave us our FDV, which is fully diluted valuation or your fully diluted market cap. Now, so this is how you now do your trick. Let's use mathematics now. If I know, okay, I don't know the price of an asset, but a project comes and tells us that the circulating supply is this, which is 100,000. 100,000. We don't know the price. Let's say the price is in question mark, right? We don't know the price. And then we were given the market cap, that's what? $100,000. So this is how people are being able to properly tell when they know the circulating supply of a token, which is this circulating supply. They don't know the price, but they can envisage that if this token is going to list at 100 million market cap, this is what that price is going to be. So how did they now come about the price? So we can just say that this price, we can call this price X, right? We can call it X. Or let's say Y. Let's call it Y, right? So based on mathematics, 100,000 times Y would actually give you, it actually give you 100,000 Y. So this is just equation equal to $100,000, right? Now you want to now find the value of Y. So what will you do? You have to actually divide both sides by 100,000, right? So in finding the value of Y, so you now say Y would now be equal to 100,000 divided by 100,000. And we know what that answer is going to be, right? So that gives you 1. So that gives you 1. So this helps you understand how people calculate. Now, why is this tokenomics and understanding this calculation important? It's going to help you make informed decision. For instance, one of the problems we're actually having with a lot of crypto projects is the fact that in this slide here, one of the things I talked about when I was talking about supply is float, token float. Let me give us when it comes to float, a lot of projects are floating less token I mean, their circulating supply is less than what they are going to float later in the future. For instance, look at the circulating supply of Immortal Rising token. The circulating supply is 183 million token, and their total supply is 1 billion. What this tells you mathematically is the fact that the circulating supply of this token is just 18% of the total supply. Now, when you see that a token have the circulating supply to be 18%, the next question you should be asking is, where is the other tokens? When will those tokens be unlocked or be emitted into the market? So these things gives you an idea of how to position on the project. Because if you have 18% of your token in circulation, what it actually means is the fact that if I carry another 18% into this market, it's just like when we talked about the fact that 50%, let's assume that 50% of a token is being held by one wallet. Let's even just say. And the wallet is not selling, he's not trading, he's just holding the token. And the remaining 50% is what is moving in the market, what people are actually exchanging, buying and selling, creating price action, pumping. What people are pumping in the market is the remaining 50%. If that guy who is holding the remaining 50% of the supply enters that market and sell, he's going to be dumping on everybody. Nobody is going to escape it. So now imagine if the circulating supply of a project is 18%, it means that that project have even much more than about 80 something percent that has not been released into the market. And then that's more reason why sometimes a lot of people, they look at different projects on the blockchain and then they say things like, let me use Uni USDT. So I don't like people being deceived, especially when you pay attention to data, right? Do you know that you can look at Uniswap, right? You can look at Uniswap. Is it Uni? Let's even assume Uniswap, right? You can look at Uniswap and say things like, oh, during the last bull run, Uniswap got to $45, right, in price. Currently is at $5 at current market price. And you now say things like, if Uniswap goes to all-time high in this bull run, I would have made almost 10x. So from here to here is 9x, right? Because 5 times 9 is actually 45, right? So we are going to be making like 9x. So somebody is going to be looking at this chart and saying that, oh, this project have done an all-time high to this level in the past. So I am going to be buying into this project because it is coming from somewhere. It has been trusted and tested, right? So, but some of the things a lot of people don't know is the fact that most of these old tokens, they floated very high in terms of the supply, the circulating supply as at many years ago that you were believing the token is nothing compared to what we have today. For instance, Solana was one of the issue, right? Solana had that problem, years back. See, there were so many reasons why I did not even want to touch Solana 4 years ago. Other tokens also had the same issue. In fact, one of the guys that I love so much is BNB. And the fact that I love them is because these guys, they knew that they floated good quantity of their token. What they did was they were having different cultural burning. They were burning most of these tokens, because that is the only way they'll be able to preserve the valuation of this token or the price. Go and check how many tokens within the past 4 years can match the movement of BNB. Why? Because they embedded into it deflationary mechanism. So you can't look at a project because it has pumped in the past and then you say oh, because it has done an amazing height, I'm going to buy or lock in. Did you find out what was the circulating supply as of 2021? Because the less quantity a token have, the easier it is to pump money into it. For instance, where is that stuff? For instance, these guys, they actually brought in 18%, right? 18%. If they want to manipulate this market, they can easily manipulate it. And guess what? The valuation they even started with was a valuation that can be easily manipulated. That's why if you actually watched when they actually launched, you will realize that they pumped this token by 200%. And that's more reason why when you understand tokenomics, you can wait for a token or a project. For instance, since they've told you the circulating supply, you now tell yourself, okay, if this token lists at 100 million market cap, this is the price it's going to list at. So what happens is that price you hold at 100 million, when you see a price that lists, and when it lists at a price 10 times less, it tells you that this is listed at 10 million market cap. So it now tells you that, man, it did not list very well, right? And most times, that is what a lot of projects they tend to do. They don't list very well so that they can actually manipulate the price at launch. But the reason why, no matter the manipulation these guys could have done, the reason why, see, even if you had gone to the TL and said that we are going to short this token, there was no way they could have pumped this project, no matter how they wanted to do it. The reason was, one of the things about launching an airdrop token is the fact that when you launch an airdrop token, the good quantity of the airdrop allocation or the circulating supply is going to airdroppers. You have a lot of sell pressure coming in first. The wrong thing this project actually did was 3 days later, because people who actually claimed airdrop, they only got 50%. I don't know the person that actually planned their tokenomics for them, but the person did a very, very bad job. And I was saying it before the launch. Why? There's a lot of pressure at listing. And then you are unlocking the other 50% 3 days after. 3 days after a project have not even had the opportunity to breathe from launching an airdrop token. So, and that's more reason why the project, right from the first day, because they listed at less than 5 million market cap. Less than 5 million market cap. Way less than 5 million market cap. So that's more reason why they were able to pump it. I think they listed at 4 or 3 million market cap. They were able to pump it by 200%. After pumping it by 200%, it started going down since then. 2 days later or 3 days later, the people who also got the remaining 50% of their airdrop token, they came back to the market, they still dumped on the market and continued downward movement. So the only thing that is left for the project is, except they will go and look for investors that will come and pick the project from the floor. But how many investors look at a chart that has actually nosedived and want to pick it up from there? Very few. In fact, one of the things we've discovered about a lot of Web3 projects is the fact that it is easier to raise money before TGE than to raise money after TGE, except you are building something that we are all convinced that is making sense. So, tokenomics is actually important because tokenomics will help you understand the potential of a project long term. And if a project is giving you circulating supply to be way less than total supply, then you want to go and find out when are you going to unlock the other projects. And that's more reason why some people, let me even just say this, there are some people, they don't treat heavy. All they are doing is they are waiting for a very good market catalyst. When I say very good market catalyst, for instance, if you go and check some token unlock, I think IMX, that's Immutable X. I think that project has been dumping badly, right? I think it's not just IMX. There's several projects like that. IMX, I think they've unlocked, right? I've not checked it, but let me see. I think they've done their unlock. In fact, I think I checked it. INX, okay, look at you see IMX, there was a particular project that is supposed to unlock. They're unlocking over 30%. It was so crazy. See, already I knew that project was going to tank, like heavily tank. Where's big time? Where's big time? Okay, look at big time. Big time is going to unlock in 1 day, 5 hours, right? It's going to float. It's going to unlock about 36%, which is about 37 million. So the market cap, where's market cap? Big time. Market cap is currently at 102 million. And it's going to be unlocking about 37 million. Let's look at the chart and see what it's looking like. Because I feel a lot of people would have been shorting it before even now. Because some people, what they do is they will go and short it a month before or a week before. Or see, I even feel that sometimes it's even understanding patterns. Right? So let me use sports. Big time USDT. Let me use Nexi. Okay. So you can see it has actually been gliding down, and the unlock is still a day and few hours. So what some people do is they look for, remember when we started this session, I said you're looking for one of two things. Is either the project have a catalyst for buy, for long, or a catalyst for sell. It is one of two things. There are different portfolios that one could have. You can have a portfolio using doing daily trade, right? And there's another portfolio you use in waiting for this kind of opportunity, and then you are hitting it and milking. So you pay attention for fundamentals, you pay attention to market capitalization, you pay attention to token float in terms of supply. It's so bad I could not even come to this, right? Holders count is even very important. Holders count is important. For instance, and that's more reason why I indirectly talked about holders count when I was talking about some projects that are actually airdrop projects. When you look at their tokenomics and then they say that 18% is going to be their circulating supply. And inside of this 18%, let's call that 18% 100%. Right? So because 18% of 1 billion is going to be 180 million token. So let's say out of the 180 million token, they tell you that 60 or 70%, let's say 70% is going to airdrop hunters. Automatically, it helps you understand that, first of all, these guys have a very big float of supply out there that will be unlocked very soon. And they've also given good quantity of the token to airdroppers. So it helps you understand that there could be initial retracement, and then there could also be future repercussion. So you cannot decide and be like, I can take the initial or I can also take the latter. So you look at how are they planning their unlock. And some of the terms you should be familiar with when it comes to unlocking is linear vesting. All right, should be linear vesting, right? And then I'm trying to and then cliff, right? Cliff. Now, when they use these two words, right? So let me give us an instant. So if I tell you that, so let's use this same token. I think I actually want to go into. Oh my goodness. Okay, so let me talk about Cliff. So let me use the same project. Now imagine this project, circulating supply is actually 18%, right? So let's now say that the other 80 something percent let's assume they tell you that at TGE, 0% will be unlocked. I'm talking about the remaining 83%. 0% will be unlocked. And then 3 months cliff. Now, let me explain what that 3 months cliff. If they use 3 months, if they use 6 months, let me just help you understand what the word cliff means. It means that cliff is, let me just use it in layman language. Cliff is used to express that no token will be allocated to anybody in that distribution chain within the specified amount of months before the cliff. So, which means if they say 6 months cliff, it means that within the next 6 months, nobody is getting a dime. So, for instance, if they say that they are going to be allocating 20% to the team with a 6 months cliff, it means that within the first 6 months after TGE, the team is not going to be getting 1 dime. Then you will now see something like with 1 year linear vesting, right? So when they say 1 year linear vesting, 1 year means 12 months. So linear vesting means that within the space of 1 year, they will give them that 20% of their token. But the 6 months cliff means that the first 6 months, they are not going to get anything. So it means that after that 6 months, you will have to count 1 year from after the 6 months in order for them to completely collect the 20% allocation that they should get. So meaning that you now have to divide, so monthly, so linear vesting of monthly, 1 year linear vesting, so they can tell you different percentage monthly, but I can just calculate it myself by looking at, if I have 1 year linear vesting, it means that 12 months divided by what is the 20% in terms of quantity. You divide it and you can tell what they are getting every month. So you have a monthly linear vesting of 20% for 1 year. So with that understanding, it cannot tell you. So most times, this is even what I do. If I want to trade those type of token, and maybe those tokens are very solid or they are looking solid, I will trade them before, within the first month to the 4th month of the cliff, or the 1st month and the 3rd month of the cliff, if I'm going to be bullish on them. Then after the 1st to the 3rd month, I would be very careful on how I actually interact in terms of longing. Now, it's not as though the unlocking of these tokens are very bad, because see, most times the unlocking of this token, when they unlock them, they use it for developmental purpose of the project. But see, right now, with the way the space is, people, I don't know what's going on. A lot of devs are no longer thinking long term. In fact, they don't send development. Why? Because they're not even building real utility, right? So how would you, when they're not building real utility, how can you trust development? You can only develop already existing solution or very good solution. Or you want to develop more rubbish. So it's important to zero bias, zero emotion. The aim is actually profit. So when you are interacting with tokenomics, it is not just about the information. Like I said, the power of research is the interpretation of the data that you are getting, the interpretation of the information that you are getting. That is what is going to help you position properly on that particular project. All right? So receive the informations and then properly interpret it, for a buy or sell momentum. So let's just quickly run through it. I just looked at my time and there's almost time. Fundamental news are actually important because when you're actually taking trades, you have to also understand that we are in a market where fundamental news now affects. Why? Because of the players that are in the system. And these players are holding the huge fund, because sometimes people will be like, why is it that FOMC meeting is now disturbing crypto? before it's the way the Fed is, their statement, interest rates, CPI, betting consign us, consign CPI, right? So it was not always like this. So how did we come to this point? We were crying for adoption. But when you cry for adoption, you are asking for more money, right? So when institutional traders were coming in with their money, we were happy, right? Because it was pumping the market. But when they come with their money, they don't just come with their money, because the money of a man is the representation of his character. So the way they behave with money, in other asset classes, that's the way they will behave here. For instance, as soon as I heard a few days ago that $10 trillion was being wiped out from the stock market, I was expecting a hit in the crypto market. Why? Because most of the guys that are playing in those asset classes are part of the people playing here. The stock market industry, the stock industry, I think is as buoyant globally about $62 trillion, $60-something trillion. And America is holding about $50-something trillion of the stock market globally. So if $10 trillion is wiped out, then guess what those organizations, guess what those institutions, guess what most of those investors are going to be doing? Most of them are going to be pulling funds from other asset classes in order to be sure that the economy have actually stabilized, or the Trump tariff, the impact of the Trump tariff is not actually going to eat into these asset classes. Because people's stake in the market is huge compared to what we think. Yes, we want BTC to be up, but people are also protecting their portfolio, because most of those people are either asset managers, hedge funds, different organizations or institutions. So news are actually important. Now, one of the things about even most forex traders will tell you, during high news impact days, the days that have high impact news, the technical traders, most times they don't even open trades. They just let the market settle and then they do their thing. Some of them still wing it. So if you are going to be opening trade based on whether your technicals or your fundamentals, if there are news on site, then you should expect volatility, right? So these things could also inform. And then if there's going to be a news, remember what I said, whatever fundamental there is, the interpretation of those fundamentals is important, not what is on the TL. How do you understand the fundamental? What have you studied about the fundamental? Ecosystem potentials. Most of the time, for instance, for most of you who actually noticed what happened on the base ecosystem, was it late last year? During late last year, the base ecosystem picked up when it comes to memes. And that's one reason why you have to pay attention to ecosystems, because you may be shorting tokens and then you want to go and say, oh, there's this token that is just pumping, whatever go up will come down. You now went to short Toshi. Sorry, I'm calling it Tochi, right? That's what I'm calling it, right? It's TOSHI, right? So it's a very it's a meme token on the base ecosystem. As of last year, while it was actually pumping, people who were trying to get on a short were getting liquidated, because that guy, I'm talking about after it hit centralized exchange, it pumped over 1000%. So you also have to understand that, are there ecosystem vibe or craze around a particular asset class or assets? So because most assets listing on those ecosystems, most times, most of the ones that are either first movers, they tend to breathe well. That's one reason why when a token is actually pumping, you need to go and check what is causing it to pump. Because most times there are fake pump. Those fake pumps are more or less like inducement. They want to induce people to make people like get greedy, right? And then, so if those pumps that you're actually seeing are not tied around fundamentals that you're either seeing on the project page, it can be one of two things. sometimes a project can pump, the token of a project can pump because of privileged information investors or institutions. Oh dear God. Because of privileged information that investors have about the project that is not on the TL yet. And then by the time they are getting in, you will see that initial pump. So what they are doing is they are buying the floor. And then later on, they will not introduce that news. For instance, go and check it. Most of the tokens that are going to be listed on Binance, as soon as the listing gets announced, check the time they announce the listing and check that the candlesticks before the time of listing. You realize that some people have already started buying. The pump have actually started. So what they do is they buy the floor and then they wait for you. So by the time you come, so that's more reason why it is important to pay attention to your fundamental. There are repeated patterns that play out in the market consistently, right? And then token listing across exchanges are also things you should actually watch out for. I would have loved to actually do various practical, but I'm sure that with time, because the truth is, in all of the trainings that we're actually be having do the next few days, and we're going to be having different amazing tutors come teach you. We can't actually exhaust most of the things we actually want to share, right? Because these trainings are actually not, let me not say, they are not actually structured into a curriculum, right? Where we are giving you more or less like a roadmap from cradle, or which is from entry level to professional, right? So we're just trying to just pick from certain aspects that can actually help you at least find your base. So let me just do a review from what we shared. Where can you find these tokens? You are trading futures. Pay attention to exchanges that tend to list projects easily or more often on their futures segment. Right? That's how to find tokens. Where can you get information on these tokens? You can get information on CoinGecko, on CoinMarketCap. For most of these projects, you want to know when they are going to be unlocked. You can use DeFi Llama. There are different platforms. Let me post it. There's, I think this one you need to sign up, but you can use Insight Unlock. Let me copy it. This is the group. Okay, let me post it. You can use, oh, it's actually locked. Okay, this is where it's happening. Okay, it's actually locked. So, but when it gets open, I will post most of these links actually in here, so that you guys should be able to. There's tokenomists, right?